All right, well, it's time now for a business update. And Delano D'Souza joins me now for that business update. And Delano, we're going to start with a warning from the International Labour Organization. What do you got for us?
That's right, Molly. The ILO has sounded the alarm over flatlining wages in developed countries. The UN body is urging governments to boost the minimum wage. Salaries in developed countries grew a dismal 0.2% in 2013. Real wages last year in Greece, Britain, Ireland, Spain and Japan shrank below levels last seen in 2007. Oliver Farry has the details.
As the global economy remains sluggish, workers are being hit hardest. The International Labour Organization's Global Wage Report warns of stalled salaries in many countries that barely keep up with inflation.
Growth of wages has slowed at a global level, so there was an average increase of global wages of about 3% a year in the years before the financial and economic crisis, and now since then it's an average of about 2% a year.
When China is subtracted from those accounts, the growth drops to 1%. The ILO says that political changes in the labour market have eroded workers' rights and driven wages down.
We believe it's not a coincidence that the weakening of collective bargaining systems in many countries, this weakening of collective bargaining coverage and the bargaining power of workers and trade unions, we think is definitely implicated in the erosion of wages in many countries.
Unemployment remains high in many European countries, but the United States has seen more people returning to work. Figures to be released Friday are expected to show a rise in job creation for the 10th successive month. But low wages continue to anger many. Fast food workers went on strike across the US Thursday, calling for a minimum wage of $15. This follows strikes in recent years by workers in supermarkets such as Walmart during Black Friday sales, protesting against wages and conditions.
Let's take a look at how the European markets are trading this session. All major European indices are in the green this Friday. Markets in Europe eyeing the US November jobs report due out later on Friday. Now markets are also higher after the European Central Bank signaled it would undertake more stimulus measures. On Thursday, Bloomberg News reported the ECB is considering a large bond buying program. Meanwhile, Germany has come out in staunch opposition. Speaking on Friday, the head of the Bundesbank said you simply cannot apply the same formula in Europe that has succeeded in the US or in Japan. Jens Wiedmann says that unlike Europe, the US is a central state that issues bonds that are very safe and secure. Next, some passengers on Singapore Airlines have run out of luck. Now, between Sunday and Monday, passengers using certain online sites in Australia could purchase business class seats for economy fares. Singapore Airlines doesn't know how many people purchased the tickets. However, 900 journeys between Singapore and European cities were booked. People who thought they had scored big will now have to either fly economy or cough up the difference. And with that, it's a wrap on this business bulletin. Molly, it's back to you.
All right, Delano, thank you for that update there. We're going to take a quick break, but we'll be back with more headlines. Do stay tuned. You're watching France 24.